What's up, everybody? Mike Sharp here again. This is Sharp Investing. Thanks for coming back to the channel. I'm going to look at the merger deal with Spirit Airlines and JetBlue today. I think it's a pretty interesting situation. There's a huge amount of upside if this merger goes through, and it looks like the market thinks there's almost zero chance of that happening. So I'll take a quick look at that one in this video. Now, I haven't bought into this situation yet. I'm still doing research, but I thought I would flag it and have a chat about it on this channel. Okay, so the background, if you haven't heard, Spirit Airlines was given a takeover offer from Frontier last summer, 22, for $2.9 billion, mostly in stock, some small cash component, and then JetBlue swooped in and offered $3.6 billion. And eventually upped it to $3.8 billion, which would be $33.50 a share. The stock is trading at 1634, I think, last I looked. So it's more than 100% up from where the stock is trading now. The problem with this is the Department of Justice has sued them to block the deal, and they have a few reasons for that, and I'll go through some of the reasons. The Department of Justice is basically saying you're going to take this low-cost carrier out of the market and basically screw the consumer, right? Because then there's no more low-cost airlines on certain routes. And then Jack Duffley kindly pointed out to me that it's not actually about that. It's about big business bad, and they just use whatever reason they can come up with to stop companies from becoming quite large. Now, I think that it's kind of ridiculous, because if this merger goes through, then that will make the 5th biggest airline in the US. But there's been a lot of mergers that have gone through, right, with the big four to create basically an oligopoly here. And I think the big four account for about 80% of the market right now. So guys like JetBlue have to get to a larger scale in order to compete, because the bigger guys have theoretically they have a fixed cost advantage, and they have a network advantage and stuff like that. So I guess the Department of Justice doesn't really have a leg to stand on if they say big business bad, because there are bigger businesses in the space. So what am I going to talk about here? I guess the market doesn't think this merger is going to go through for a few reasons. Okay, so let's look at the actual sort of lawsuit here first, and then I'll talk about the business afterwards. So you could actually argue that there are reasons to stop this, right? This could be anti-competitive behavior by JetBlue, because you have an airline like Spirit that is basically holding the pricing down in the industry. And if you get rid of that bottom layer, then everybody else can sort of, raise their prices. And they have, there's some leaked documents, and one of them said that that's exactly what JetBlue is planning to do, is to get rid of all the Spirit sort of pricing and replace it with JetBlue pricing at sort of 24 to 40% more expensive flights, and so they would do their normal thing where they would remove some seats from the plane to add extra legroom, make it a better flying experience, but also raise the price. So there's some argument to be made that they're doing kind of what the Department of Justice is arguing that they don't want to have happen. Okay, so if we look at the actual arguments, one of them is they remove head-to-head competition from the market. I think this one is kind of BS, because that's the way the capitalist system works. Like, if you get rid of the low-cost carrier, somebody else is going to come in and try and occupy that space. Like Frontier, who originally tried to take over Spirit, which is actually a more sort of a better match in terms of what they're offering. They could expand into these markets where Spirit exists now and they don't, right? So somebody always kind of comes and picks up that part of the market. In every market, like, there's always a low cost provider that comes in and tries to get those customers. So this could list, the second one is that this would lead to higher ticket prices and reduced capacity. So now the higher ticket prices, that's probably true in the short term. But like I said in the last one, somebody else will come in and fill that spot. Third one is it result in less consumer choice. That's sort of like it. The choice is like with Spirit, everything's unbundled. You have to pay to do this, pay everything. There's a fee for everything. And if you want to just have bare bones cheap flight, it's super cheap. It's like an a la carte menu. Whereas with the higher cost airlines, there's just one fee and you get all the services that they offer. So, JetBlue could maybe appease the judge by saying, you know what, we'll just keep those options, right? If they need to negotiate on this in the lawsuit. I should mention that the lawsuit's about to start in October when I'm recording this. So I think it's scheduled for the 26th. And JetBlue says that they expect Spirit says that they expect this, the process to be finished at some point in the first half next year. So that means that, we'll get an outcome one way or the other within sort of like a 9-month time frame. The last one is the facilitated increased coordination among JetBlue and competition. Again, I think this is a little bit BS because, that's more related to a deal that they had with one of the other airlines that got shut down by the Department of Justice previously, and you can go take a look at that one if you're interested. But like if we look at the main one, which is it's going to lead to higher ticket prices and reduced capacity. So what JetBlue's done in the meantime, since this lawsuit was brought forward in March, is they've actually agreed to divest a bunch of these slots and the gates in some of these markets that the Department of Justice is worried about. So that's like LaGuardia, New York, Newark, Boston Logan, and Fort Lauderdale. They've agreed to sell these gates to like Frontier. Who else is it selling them to? To Allegiant. And so they're basically saying that, okay, if you want low cost flights on these routes, we will sell them to the low cost carriers and then they can continue that. So they've kind of preemptively addressed this concern that's going to be brought up in court, I think in preparation for the trial, to say, well, it's actually not true. So they've actually, the suit that was brought against JetBlue Spirit originally, is actually not the same business that's operating now on this front. So that makes me think that there's possibly a higher chance that this is going to go through than the market is pricing, basically. And the last thing I'm going to look at here is, well, I'll do a thesis summary after, but the last thing in terms of points I'm going to talk about is if you're going to invest in a situation like this, you'd have to look at the downside and say, okay, is this actually a business I would want to own if the deal actually fell apart, right? And so that's what I'm still working on now. I have never invested in airlines because I do agree with Warren Buffett that it's just basically a garbage business. It's huge capital expenditures, very low cash flows, and in every recession they get nuked. Airlines go out of business all the time. It's just a bad business generally. So that makes me think I don't really want to touch it. But then, I'm a little bit greedy and I say, well, there's 100% upside if this goes through within 9 months. Like that's a pretty good upside here. So if we look at Spirit, they actually were very profitable before COVID. They were up over 10% net margin before, previous in 2019. I think they were around 8 or 9% in 2019. Sorry, above 10% in 2017, and then 8.5% in 19. If you look at the current price to 2019 earnings, it's actually trading at like just below 6 times earnings, and then 3.5 times operating earnings. So it's actually fairly priced if you believe that business is coming back. But the issue is airlines have been absolutely destroyed by COVID. Like the industry as a whole is still negative EBIT margin even after 3+ years since the COVID outbreak. So I guess, and a lot of that is to do with the cost of the cost inputs, right? Like wages are way up, fuel costs are way up, and those are the two sort of biggest line items on the income statement, and those things are kind of killing airlines. And Spirit hasn't recovered to full profitability yet, although they did post a 29-cent adjusted earnings in Q2 this year. So it makes you think, okay, well, they will eventually get back to where they were, but it's a fairly long process. You probably need wages to stop going up, and then they have to adjust prices a little bit higher. We need the cost of fuel to come down. But in that scenario, let's say they did Q2 again, they'd be just under $1.20 earnings. So that's still a pretty high multiple on a $16 stock. So it's not really cheap on that basis. But if we look on a revenue basis, the entire industry is trading at 0.4 times sales. Spirit is trading at 0.32 times sales. So it's actually cheaper than the industry as a whole. So you would think that, well, that's one of the metrics that makes me think, well, this deal is not being priced in at all, because a lot of airlines are negative cash flow, and the average is 0.4 times sales. So it makes me think there's possibly not that much downside here, even if the deal doesn't go through. However, at the end, I'm going to show that I'm going to predict that if it doesn't go through, it's going to drop to $10. So that's the kind of downside I'm looking at, just to be safe. I guess you could argue also if there's a recession coming, which I do think there is eventually. I don't know when. It'll come like next month, or it'll come in a year or 2 years from now. But a company like this might actually benefit from a recession as people move away from the full service carriers and look for cheaper options. Like, they might actually be a little bit counter-cyclical, but I'll have to look into that a bit more. So yeah, I think on a would I own Spirit Airlines basis, I'm not sure that's true yet. Based on other options that I have, I think other options are better. But if I start believing that there's a good chance that this deal does go through, then the probabilities start making it look like, might be a good bet. Okay, so the thesis here is, number one, if it succeeds, you make like 90, 100+% in 9 months, right? That is, we have a very clear not clear, but it's a very the window is pretty clear. It's not going to drag on for a huge amount of time. The trial is going to start shortly, and we'll probably have an outcome within 9 months. So it's a yes, no, and here's the time frame. I like that. If it doesn't succeed, you actually have maybe the stock doesn't drop immediately, because you have a company like Frontier that was making an offer previously. Maybe they come back, and you can see by how the Spirit Airlines stock reacted to that. It was trading at about $21, $22 prior to the JetBlue offer. So we might actually get a move to that level if Frontier comes right back in to make a bid. Now, the fact that there was two companies that bid in a very short period of time on this airline makes me think there is demand, right? Like in an industry like this, consolidation actually helps, because you need economies of scale to turn a profit, since it's such a low margin business. So I think that there's probably a good chance that somebody else swoops in and tries to buy them. That might be a residual safety net. The Frontier deal was a little bit different though, so it wasn't all cash. So it's hard to value it at full value at the $2.9 billion that they offered. So the third option is first option is the JetBlue deal goes through, and then second option is maybe Frontier or somebody else comes back and makes another offer, and then the third option is that basically everything just fails, and you end up owning this low-cost carrier at 0.3 times sales, and then you kind of have to wait until they get profitable again. But who knows when that's going to be. For me, this is just an odds play. So if I show you my expectation, my quick expectation calculation here, I'm trying to be conservative here. I think that there's about a 40% chance that this is going to go through. Let's say you get a $32 upside from that, because it never goes to full price until the deal actually goes through. So let's say it pops up to $32 on a successful trial outcome. You get a 96% upside there. The second scenario is, let's see if Frontier comes back and you get maybe $22 as the upside. The return there would be a 35% upside. And then if everything fails and the stock drops to $10, you're going to lose almost 40% on that. So if we use our expectation analysis here, the total would say that if you do deals like this, if my probabilities are correct, now that's a big if, right? These are just quick assumptions I've made. I could be off here. But if you did 100 of these deals, 100 of these sort of merger situations, you could expect over time to average about 30% upside. But the truth is, you only have one opportunity on this deal, so it's not going to be, you can't play the probabilities game because it's only one outcome. So I'm going to keep looking into this one. I do think it's interesting. That upside is just too juicy for me to ignore. And if I can find a reason to believe that this may go through, then I may make a bet on it. I guess the last thing I would mention is the judge. So I was reading that the judge named William Young, a senior status judge who was nominated by Reagan in 1995, so Reagan, conservative. Libertarians beware, Judge Young will not rubber stamp this deal simply because he's a conservative judge. He's earned reputation as an even-handed arbiter over his nearly 4 decades on the bench. So that makes me think, at least they've got a chance of winning this. This is not a judge that's appointed by the Biden administration that actually the force that doesn't want these kind of deals to go through. So if they can come up with a good argument, and I think that JetBlue probably has the advantage legally here, just from a cost perspective, because they can throw millions and millions of dollars at high-powered lawyers, whereas the government has I don't know what you think about the government, but I think it's extremely inefficient, and you don't usually get the best people on that side of the equation. And I think if you look at the history of the Department of Justice with these cases, they don't have a very good track record. So they typically lose these kind of cases, but I wouldn't put a huge amount of value on that thought. So anyway, that's it for this. It's a really interesting situation. If you have more resources on this or have some ideas, please post it in the comments so myself and other people can read. But anyway, thanks for watching, and I will catch you in the next video.